CPI data was released, and as a result, Bitcoin saw a significant rally towards 26.4k. However, over the last couple hours, we have seen a strong 10% pullback toward 24,000. On the higher timeframes, Bitcoin is still sitting underneath the 25.2k major resistance. In today's video, we're going to go ahead and discuss the macro charts as well as the upcoming PPI data. Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin's price action, focusing on the macro chart. We're here to talk about the overall macro trend, how it is looking, and what we need to see for a continuation higher. We'll also talk about the possibility for a rejection, market data, traditional markets, PPI, CPI, FOMC, and so much more. Let's get into it. Now, before we do, smash that like button, hit that comment button, and obviously subscribe to the channel. We do daily videos focusing on Bitcoin's price action, the technicals, the data, the structure, no emotion, no bias, only facts. You can find us on Telegram for more information, guys. That'll be the second link down below. Updates, charts, news events, analysis, videos, information, educational posts, so much more. If you're interested in trading signals, you can join us on our VIP Telegram. All the information can be found in the pinned comments in that Telegram channel. You'll get access to two chats, the main group chat and of course our group chat with all of our members. The main channel is going to be the one that provides the trading signals. You can see entries, targets, stop losses, everything is detailed for you. And of course a group chat with all of our members who do daily trades as well. More information and trading track record can be found in the pinned comments. Let's get into the video, guys, starting off with the market data. So as we've said, for today's video, we're going to be focusing a little bit more on the macro charts, talking about the 4-year cycle, talking about higher time frame indicators, discussing the implications of the Federal Reserve's decision to bail out the banks, talking about CPI, talking about FOMC, all that kind of good stuff, and then relating it to the smaller time frame and discussing the next moves for Bitcoin. So currently, unfortunately, this website is looking like it's running into some technical issues, so we can't see the monthly returns, but what we can see is 24-hour volume is up 22.81%, coming in just under 200 billion. This is probably the highest volume I've seen actually for quite some time now within a 24-hour period. Obviously, liquidations have rallied 53%. We're seeing a total of $310 million in liquidations. Absolutely insane, guys. And again, a lot of these liquidations were to those shorts on the way down, but we have seen in the last 12 hours a lot more longs being liquidated as the prices pull back. We kind of squeezed out those shorts, and now we're squeezing out those longs. So a lot of chop going on still. These higher time frame swings are still chopping a lot of people up. And this is why we said, guys, be cautious when trading news events, as the volatility can get you quite easily. You have to be very careful. Looking at the overall long and short ratio, we can see in the last 5 minutes, people are definitely loading up into longs over here. There is a bit of a discrepancy, but overall between exchanges, we do see a very slight advantage to the longs right now by around 0.17%. Again, guys, we're going to go ahead and talk about the broader markets now. So the DXY has fallen. And again, CPI came out around 0.6. Actually, if I do believe I'm correct, it came out around about what was expected. And I have a theory for this, because if we look at the data we've been getting leading up to, I would say, the last 10 days. So go to 10 days ago and the data prior to that. So we had job data, we had employment data, we had income data, we had CPI from last month, we had PPI from last month. All of the data we were getting was indicating inflation was actually on the rise again. And I would like to say that if you look at that data and look at the narrative that was developing prior to 10 days ago, you would have been more confident, or at least you would have had a good indication of where inflation was going to be according to this CPI release. But what happened within the last 10 days? Well, banks started blowing up. The Federal Reserve had to announce they're going to bail out the banks. But here is the complication. if CPI is rising, which it currently should have been rising according to this data, how can the Fed allow data to come out this month that reflects rising inflation if they've announced they have intention to print a lot of money to bail out the banks? So it would be contradictory to their narrative, contradictory to their motive, and people would be questioning the authenticity of their decisions or the legitimacy of their claims. And they can't allow that. In my eyes, I truly believe the current CPI data was completely manipulated to the point of which it was a non-event, meaning it didn't show the true data, which would have been rising inflation. It didn't show the current data, which again would have been rising inflation based on all the data we had. They had to make it a non-event and they brought it to neutral. And of course, that facilitated a situation where they weren't particularly lying, saying inflation was going down, but they weren't being completely honest, saying inflation was rising. And that, again, feeds into the narrative which they need us to believe, which is everything is under control. We are in a position where we can facilitate this bailout and it won't have lasting or damaging repercussions on taxpayers, which it absolutely will, guys. The narrative is being manipulated, shifted, changed right in front of our faces, and most of us cannot see it. Very interesting stuff. I do believe CPI should have gone up, but the data said otherwise. We have now seen CPI plateau. Again, this has shifted the probabilities of interest rate hikes for FOMC. We've now seen an 89% chance of a 25 basis point hike for next FOMC, which is in about 10 days, guys. So keep your eyes on that. Of course, we know the implications of that already. I do want to discuss PPI, as PPI is coming out very soon. PPI is coming out in about 10 hours now, so about 9.5 hours. Again, PPI is a very important leading indicator for inflation. If you know what a PPI is Producer Price Index. This is PPI over here. PPI rising will indicate CPI rising, as it indicates the increased production costs for manufacturers and companies, etc., etc. If rising prices occur within the initial developments of products, it generally gets pushed to consumers. So meaning if the cost of materials and goods rise, the cost of these products and goods and services also rise, and therefore we generally see inflation follow. So going off all of the data we're seeing, we can expect PPI to rise, but going off what we know the Fed want us to see, we can expect PPI to actually come in, I would say, equal to what is expected, which is sitting around 0.4. I do expect it to come around 0.4, maybe 0.5. I would expect it to come around there, considering it is most likely going to be manipulated to push the narrative the Fed wants us to see. Again, I'm not going to get into this diagram, but you can read the diagram yourself if you are interested. The DXY, of course, has dropped on this news, and that has resulted in the markets seeing a rally. We have seen the S&P 500 and our Dow Jones both bounce on their respective support levels just a little bit, and of course, Bitcoin has rallied quite strong. We have seen bond yields come down a considerable amount, but of course bounce in the last 12 hours as the markets have slightly pulled back, particularly the cryptocurrency market pulling back as that was well overextended on that rally. And again, a mix between the data, the announcements of printing and that money printer turning back on, but also the fact that Bitcoin has kind of got this overall consensus, which is like it's a safe haven for a financial collapse, and a lot of people have put money in that in the last few days after watching the banks collapse, and it's kind of like perpetuated that rally we have seen in Bitcoin over the last few days. Now, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. If you have been following the channel for a long time, guys, I know a lot of you guys have been around for a year plus, maybe even from the start. If you've been in VIP to free channel, you would know that we talk a lot about the short term. I just really want to drill this point in before we get into analysis. I'm a scalp trader. That is what I do. I'm a scalp trader by profession. I generally jump in and out of trades very quickly. I do broader long-term analysis and I do short-term analysis. This entire time I've been expecting and I've been saying the bottom has been in. In fact, we bought at 18,000, we bought at 16,500, we bought at 19,200, we bought at 20,000, okay? If you've been following the channel, you would have been at those levels. We're at 57% on our Bitcoin spot at our lowest entry and at our base entry, 43%. Now, I get a lot of people saying, MegaWhale, why are you bearish? Why are you talking about pullbacks? Well, guys, you can look at the chart from a short-term perspective and a higher time frame perspective. You can expect the prices to rise on the higher time frame while still shorting the scalps on small time frame pullbacks. It is completely about your perspective. And again, some of the things I say in these videos will resonate with scalp traders and some of these things will resonate with longer term holders. Just because I say one thing, it doesn't mean the other thing is invalid. I do want to get that off my chest. Let's go ahead and get into the video today, guys. So, as I said, we're going to do a broader analysis today on the higher time frame, really talking about, I guess, a 4-year cycle, talking about the technicals on the high time frames and where the price could potentially go. And I want to bring us back to a really important chart I talked about yesterday, and that is this chart right here. This chart is probably the most important chart in terms of this most simplistic chart I can show you in terms of the most important and crucial levels. As you can see on the chart over here, we have 4 distinctive zones with the very bullish zone, the healthy correction / decision zone, which we are currently in, and the very bearish zone. These zones are split up by supports or resistances. The current major support is sitting between 18,300 to 19,200. This is our major support / bearish trigger. We can see that on this chart over here, represented by this red section, meaning until we lose that level, until we break below there, technically every single drop should be considered a healthy correction in a higher time frame uptrend, or better yet, a higher time frame developing uptrend. And that is what we've been saying. That is why we didn't sell our spot bags on this pullback. A drop below 18,300 will facilitate a larger time frame pullback towards the next volume range on the macro chart. I'm going to go ahead and show you where that is. So we drop below 18,300, we run a massive risk of coming all the way down, okay? All the way down to 12,000 to 13,900. This is going to be this range over here, 12,000 to 13,900. Again, if you do use a VIPV, row size 200 is always the best in my experience. You can see the gap right over here will be filled if we do lose that higher time frame support, okay? If we go back to this chart, we can see the trigger for a bullish rally will be a break over $25,200. Now, what time frame are we looking for? This is a weekly chart, right? This is a weekly chart. It's a yearly long resistance. If it's a yearly long resistance, we use the weekly chart as indication. We are looking for a 1-week candle close above 25,200 to confirm the breakout, and another weekly candle close to validate the breakout, okay? We need confirmation that the resistance is broken, and we need validation that the trend is continuing in that direction. Moving upwards, looking at the next trigger. This is going to be 30,000 to 28,000. This is going to be our bull market trigger. The reason I say this is the bull market trigger is because if we go back to the 4-year cycle, we can see on prior cycles, every single time we have broken above the prior bull market yearly low. In this instance, this red line. In this instance, this red line. And of course, in our prior bull market, this red line. Every single time we see a monthly candle above that level, we never ever see a monthly candle back below it. We always end up developing into a parabolic rally at some point in the future. Past that point, never ever seeing a monthly candle close below it again. So those are our key level, guys. If you want to zoom out to the higher time frame, if you want to look at your key structural zones and levels, those are the important levels to look at. Going back to that chart one more time, you can see we're in the healthy correction / decision zone. The reason this is a healthy correction / decision zone is because that we entered this zone after a breakout from a reversal structure which developed throughout the bear market we were in between 2021 and 2022. You can see this is our bear market structure. We have a descending channel formation. This descending channel formation was our bear market, right? We can see the price very clearly bouncing between these lows over here and these highs in a descending channel formation. We developed a falling wedge reversal structure, which indicated a reversal from the bear market. We officially broke out the bear market and ended the bear market the moment we broke from this level here. That was the confirmation that we have ended that bear market. We are now in a healthy correction / decision zone, which could facilitate a continuation upwards into a higher time frame uptrend. When will the higher time frame uptrend continue? Like I said, we need to break above this level on the higher time frame, and again, breaking above 30,000 will trigger the bull market. Looking from a technical perspective, we can see on the monthly chart, we have the 50 EMA sitting at 24,300, okay? The price is currently sitting at 24,800, so we're above that. And we have the 200 moving average sitting currently on the weekly chart at 25,300. So two really important moving averages the price needs to get above to validate again a reversal in trend. We need to see a weekly candle above the 200 and a monthly candle above the 50 on the monthly chart to get that confirmation, guys. Those are the two indications the price will continue upwards. So let's go down to a smaller time frame, discuss the reaction at this level, what will happen next, and then talk about the technicals on the higher time frame and discuss again the technicals on the smaller time frame. So to do so, let's take a look at this chart first, the daily chart. Currently, we broke down from a rising wedge formation, guys. The rising wedge formation had three bearish targets. First bearish target was our low of our range, 21.8 to 21.5. Tick, reached that. Second target, 20,500 to 20,000. Tick, reached that. And of course, the last target, we were into that range. We did not reach that target. We bounced at that second target quite aggressively, pushing upwards into the rising wedge once more. If you watched our video the other day, you would have known our long triggers were a break above $22,597 was the confirmation for a rally back to the upside. If you watched our video yesterday, you would have known a 4-hour close back in this wedge facilitated and triggered a continuation to retest the top of the wedge. Everything has been labeled for you guys, whether you're short-term trading, swing trading, or long-term trading. We do not leave any stone uncovered. The question is now, we have rejected from the top of the wedge. What will happen now? We're watching one particular thing. We are watching the horizontal support that we are in at the moment between 24,400 and 25,200. A loss of 24,400 will confirm the breakdown of the rising support we have now developed once more within the rising wedge formation. Okay, guys, this is the support we're looking for. A loss of that support level will confirm a fake out or / deviation and continuation back down, looking for a retracement to that exact level we broke above, guys. 22,600 will be the target if we close a 4-hour below 24,400. Until then, we should be optimistic for rallies back into that high 25.2k level and looking for potential longs at the moment. Again, shorts will be taken upon that breakdown. Preemptive shorts can be taken if we see signs of reversals on the smaller time frame. Definitely keep your eyes on that. So let's dive into the smaller time frame now, discuss the technicals, discuss the structures. We'll start on a 30-minute chart. Yeah, let's start 30 minutes, build it back up to 4 hours, add our technicals, and then go to that higher time frame, that weekly and monthly chart, and do our technical analysis and talk about the overall trend for Bitcoin and the 4-year cycle. So let's go ahead and bring up some indicators before we start this TA. We'll bring up our VRPV, we'll bring up our MACD, we'll bring up our market cipher. That should be adequate for now. So currently what we are seeing a uptrend. This is a very obvious uptrend, okay? We have an uptrending support line right over here. This is our uptrending support line. I'm going to go ahead and pop it in perfectly. 1 second, guys. Just want to make sure I have this in accurately for you guys. I don't want to make it messy. That is our uptrending support. So what we can see here right now, we have broken toward the downside of the uptrending support. This is a 30-minute chart. Currently, we're going to be looking again more for shorts on 30-minute chart unless this uptrending support can be reclaimed. We have this diagonal resistance. Looking at the price in relation to our moving averages, we can see the smaller time frame moving averages are starting to converge together. You can see right over here, they're very spread out. Okay, we have our moving averages are very, very spread out, indicating volatility. At the moment, they're pinching very close. This indicates indecision and again, a drop in momentum and velocity of price, which can generally signify a change in direction if it does break or flip. So, that being said, guys, we're looking for two things. We're looking for, once again, a loss of 24,400 represented by this low right over here. You can see this low right over here. It doesn't only make up the local high in this range, but also the local low in this range, perpetuated by a potential support resistance slip here, okay? Or we're looking for a potential short below the 50 EMA at a rejection. So a breakdown, a retest, and continue downwards. That is what we'll be looking for on shorts. If we do continue downwards, we're looking at that VRPV to indicate where we're going. Looking at prior support. So you can see a perfect one right over here. Looking at this local high to this local jump point over here on the VRPV, 22,600 to 22,400. Moving down from there, guys, like I said, that is going to be that perfect area of support that we did retest on the higher time frame and we broke out of right over here, which triggered that continuation upwards. You can see the gap over there on the VRPV on the smaller time frame does indicate a move towards that level if we do head down lower. So that is going to be that higher time frame targets. And of course, if we go down to a smaller time frame, we'll be looking for potential supports developing within this range, looking for whole numbers such as 24,000, 23,500, 23,000. All these whole numbers generally are psychological levels, and we can find bases of supports within those levels. Looking at a technical perspective, guys, we can see, of course, that momentum was starting to fall a little bit on the half an hour. We saw a weak bearish divergence print right over here, signifying a reversal. And I say it's a weak bearish divergence because the angle of this divergence was quite small in terms of the momentum discrepancy. Okay, there wasn't a very large discrepancy in momentum over here, and thus it was a weak divergence. Nevertheless, it did end up pushing toward the downside, as we saw on the charts. Moving to our hourly chart, we can see again over here, guys, we don't have too much of a divergence popping up in the hour chart. In fact, we have rising momentum still with rising price. But what we did see was a breakdown of our momentum trend. We saw this breakdown over here indicating a continuation downwards. On the 1 hour chart, again, it does suggest this price is likely to come down here. On the 4 hour chart, again, we don't have too much indications on the RSI indicating any sort of divergences. We can see the price move from overbought into oversold, and if this does continue lower than that previous low on the RSI, looking at this trigger point here around 65, we can expect a continuation downwards, but that 65 will not break unless the price falls below 24.4, and therefore it is irrelevant to this analysis and is not a trigger we're looking at. So those are our small time frame triggers, guys. Let's go ahead and talk about our larger time frame before we finish it off. As you can see right now, we have 4 days remaining on our weekly candle. We are still underneath the 200. Every week we close under the 200 is another week delayed. All right, I'll say it again. Every week close below the 200 is another week delayed. We need a weekly candle to close above the 200 to confirm that we have broken over the 200 and the trend is starting to gain some real momentum towards the upside on the macro chart. Until then, we are still in this overall decision zone, guys. A decision zone, healthy correction / decision zone. There is no need to make absolute bullish statement or bearish statement within this zone, as the price is going to swing a lot, as we have seen. I currently am still betting on the bullish side, as we are above major support between 19.2 and 18.3, and therefore the probabilities of a higher time frame continuation upwards at some point is there. But will it happen now? Again, we do have to look at the smaller time frame and see what happens. I will say this, FOMC is going to be a huge event this month. FOMC is going to completely decide where these markets are going, and it's going to make the Fed's decisions in regards to the interest rates and likely the next few months of rate hikes very abundantly clear. I think we're going to see a lot of clarity this month, as now big money is losing. The moment big money starts losing, the feds pull out all the guns and they change the game, and that's when they start making these big moves, okay? It doesn't matter how much retail's getting wrecked. They can rise rates on us for years and years and years, bleed us dry. But the moment big money loses, which is again, SVB, 80% deposits were over 250,000. A lot of companies had a lot of money, hundreds of millions of dollars trapped in there. The moment big money starts losing, that is when it is a problem. That is when the feds start making decisions. That is when they change the economy. And we've already talked about this a lot, guys, but they can't really do much here. They're in a rock and a hard place. They can't let the banks fail, but they can't continue to raise interest rates at the same time. Otherwise, that will push the banks to fail. So between a rock and a hard place, and we already know they're going to choose the banks over the public. So keep that in mind, guys. If that does occur, we can expect asset prices to fall. Of course, bond yields will fly towards the downside and asset prices will continue to rise. Sorry, asset prices will rise, not fall, okay? I'm going to leave it there. If you've got any questions, let me know below. If you've got any questions, again, I do answer every question. I also do read every question, so go ahead and chuck them below. You can find us on Telegram, like I said. You can also sign up to Bitget for 15% off your trading fees, which is phenomenal. And of course, if you're interested in learning how to trade, go ahead and contact me on the Crypto Academy courses at gmail.com. Link down below. Contact information right over here. It's a 10-year course. We teach you how to trade. We teach you how to analyze. We teach you how to chart from a structural and technical standpoint. So much content, so much information. Again, this stuff will fast track you like 1.5 to 2 years into your trading career. I highly recommend it. It's been developed from the ground up to really focus on the key points. No fluff, no bullshit, really the key points. So go ahead and check it out. I'll see you guys tomorrow.